Ellevest is a financial services firm that has recently undergone a significant transformation in its business model. Founded by Sally Krawcheck, this SEC-registered investment advisor and fiduciary has pivoted away from its previous low-cost digital membership tiers to focus exclusively on high-net-worth individuals and specialized financial planning. The core philosophy driving this firm is a gender-aware investment algorithm. This is a critical distinction because traditional financial models often use gender-neutral data that fails to account for the unique economic realities faced by women. By incorporating facts like longer life expectancies, lower lifetime earnings, and different salary curves, the platform attempts to bridge the financial gap that traditional Wall Street firms often overlook. The service structure is now divided into two primary tiers for managed assets. Personal wealth management is designed for those with account balances between $500,000 and $1 million. For those with assets exceeding $1 million, the private wealth management tier offers expanded access to private equity, impact funds, and sophisticated tax-efficient strategies. For individuals who do not yet meet the $500,000 threshold but still desire expert guidance, there is a standalone financial planning option available for a flat fee of $3,600 per year. This shift reflects a move toward a high-touch, human-led advisory model rather than a purely automated experience. The investment philosophy utilizes a core and satellite approach. The core consists of diversified, low-cost exchange-traded funds and mutual funds intended for long-term growth. The satellite portion focuses heavily on impact investing, directing capital toward companies that prioritize female leadership and sustainable practices. Interestingly, the algorithm targets a 90% likelihood of reaching a specific financial goal. This is notably more conservative than the 50 to 70% target seen at many other firms, prioritizing certainty and risk management over aggressive speculation. When weighing the advantages of this tool, the fiduciary standard is a major highlight. Being a fiduciary means the firm is legally obligated to act in the best interest of the client. The use of gender-optimized data is a genuine game changer for women who need a retirement number that reflects their actual life expectancy rather than an industry average. Furthermore, for those who care about where their money goes, the excellence in values-based investing allows for a portfolio that supports pay equity and climate action. The holistic approach is also a significant benefit as the advisors look at life events like career breaks, divorce, and inheritance rather than just looking at numbers on a screen. However, there are clear drawbacks to consider. The most obvious is the high barrier to entry. By removing the $1 and $5 monthly tiers, the firm has effectively priced out many people. Needing $500,000 just to get started with a managed portfolio is a tall order. Additionally, the fees are higher than what you would find at a standard robo-advisor. While platforms like Betterment might charge around 0.25%, this tool charges between 0.55% and 1.25% depending on the balance. For an account between $500,000 and $1 million, the annual fee is 1.25%. This scales down as the balance grows, reaching 0.65% for accounts between $10 million and $15 million, and 0.35% for accounts over $100 million. There is also the reality that the relationship is entirely remote, which might not suit those who prefer sitting down in a physical branch. This tool is an excellent fit for high net worth individuals who feel the traditional financial industry is patronizing and who want their investments to reflect their personal values. It is less ideal for fee minimizers or those with smaller balances who would be better served by a low-cost index fund or a basic automated platform. While the firm serves all genders, the marketing and research remain heavily focused on the female experience, which is something to keep in mind regarding the overall culture of the firm. In summary, Ellevest offers a specialized fiduciary service that provides high net worth clients with goal-oriented portfolios and impact investing opportunities. It addresses the specific pain points of the gender pay and wealth gaps through a tailored algorithm and expert human advice. However, the risks involved are primarily centered on the high cost of entry and the higher annual management fees compared to automated competitors. Investors must decide if the personalized, gender-aware approach and the peace of mind offered by a 90% goal certainty are worth the premium price tag. Without the lower tiers, it is no longer a tool for the masses but a boutique service for the wealthy.